Morning, everybody. It's the 18th of January. We are Signal Centre Talking Ball. I'm Joe Neighbour. Not joined by Steve O'Hare today, unfortunately. He is on holiday for the next couple of weeks, so wishing him a nice, relaxing break. In the meantime, it will be just me by myself running through the latest headlines and a few charts for you all as well. So let's get stuck into the latest headlines. In terms of markets this morning, there seems to be or feels to be a bit of a risk-off feel to the markets today. We are seeing a bit of red across the board, but we'll come on to that shortly. One of the main reasons driving that is that treasuries yesterday fell across the curve with two-year yields soaring above 1% for the first time since 2020. That's on increased speculation of a Federal Reserve rate hike in March. The 10-year treasury yields rose as much as 7 basis points to 1.85%. Again, highest level since January 2020. Investors are increasingly concerned that elevated US inflation will force the Fed to tighten policy faster than expected. Now, just to break that down into terms as to why we're seeing risk off price action in things like equities. If the treasury yields are high, then effectively the risk-free rate of return, so how much money you can put into assets and not take any risk but still get a reasonable return, 1.85% as the 10 years are at the moment or higher, then there is a balancing act that investors need to consider. Do they take no risk and take 2%, or do they continue to speculate in financial markets to look for greater returns? So there is this balancing act that is a conundrum and it's going to be obviously front and center of investors' minds, which is going to cause these potential periods of volatility in markets. In terms of what's going on elsewhere in the commodity space, Brent oil extended its gains to its highest level in 7 years yesterday, as geopolitical tensions stirred in the Middle East and concerns about the demand impact of the Omicron virus variant has eased. That's adding to the bullish sentiment and further strengthening the price of oil. Separately, Bridgewater Associates leader Ray Dalio warned against transitioning away from fossil fuels too rapidly and said that cutting off supply of finance to the industry would have a destabilizing effect as inflation soars. Over to the ongoing situation politically in the UK at the moment. Boris Johnson's former top aide Dominic Cummings accused the Premier of lying to Parliament, saying he would sweat under oath that the Premier both was aware of and allowed a drinks party at Down 19 pandemic. So still daggers out very much for Boris Johnson, and he is very much under pressure at the moment. Moving on to COVID-19, according to latest research, a fourth dose of the Pfizer BioNTech vaccine was insufficient to prevent infection with the Omicron variant of COVID-19. That's according to preliminary data from a trial released in Israel yesterday, which, of course, won't be particularly welcome news for many of us. Okay, let's get stuck into some charts then. So on the back of the uh, dash to safety, if you like, we have seen a bit of an uplift in the dollar index. So it has found support at this blue line of support at 94.74. That's that previous high that we've referred to back here in September. And also we have just below that a 38.2% fib level at 94.47. So we've seen a bit of an engulfing take shape on the 14th, and we've seen that backed up with further gains. We're back in this bullish channel, but we do have to get through these resistance levels here, this blue line that we've got, which is currently priced at around 95.56. So it'd be interesting to see what sort of reaction we get there. If we do see a bit of resistance form there, then maybe what we're forming is some sort of top pattern in the short term, and there's potential there for a decent correction lower in dollar index. Still quite believe that this is bullish and that we've got this nice rounded bottom that's taken shape here over many months, and that will continue to underpin the strength, but cannot rule out a correction in the short term. But obviously, when we've got these sort of risk off environments, dollar index typically does attract interest. So we'll wait and see if there's any further developments on that side of things. Looking at euro US dollar, what we expect to see now is the opposite of what we've just seen on the dollar index, and that is indeed the case. We have stalled in front of the resistance zone at 115.00. And we've posted 3 consecutive down days as it stands at the moment. Obviously, today isn't finished, so a bit too early to call it 3 consecutive down days, but at the moment we are showing red on the candle. We are retesting this support level here, which comes in at 113.85. Seems to be doing a job at the minute. We've obviously got the high here from the 30th of November and the high here from the 31st and 3rd of January. Sorry, 31st of December, 3rd of January, which seems to be holding. If that gives way, then we may see a continuation lower in line with the dominant downtrend. Moving over to cable, interesting move on this. Obviously, it's a really sharp move to the upside. This 38.2% fib level in the on the longer term charts has done a fantastic job of support, but we've rallied to a 50% fib level in the shorter term time frame. So from this high here in June last year down to these lows in December, we've drawn on the Fibonacci annotations, and we've got this 50% fib level at 137.05 and done a pretty good job of rejecting price. So it seems as though Fibonacci's on cable at the moment are being quite well respected, which is always a good sign for us technicians. We've also seen a break of this short-term trend. I mean, given how sharp that is, it was always going to be unsustainable. So now we've seen a bit of a break there. We are trading below that. Then maybe that could trigger a further move lower. So still trading in a downtrend, although we poked above this short-term downtrend line that we've got. So I'm not sure how valid that now is. Maybe we'll see some sort of retest of that and it will hold. But if it doesn't, then we're looking for lower prices, I think, on this. And that will just be, I guess, more money flooding into the dollar index as a safe haven. Let's take a look at Aussie US dollar. So anything Aussie, New Zealand dollar versus the US dollar, they typically are a good indication of risk off and risk on. If you start to see them move lower, that is Aussie versus US dollar, then you would expect that there is more of a risk-off environment because they are linked so heavily to commodities, and dollar index is associated as a bit of a safe haven. So we've seen a rejection here at this blue resistance line at 72.75. We've posted 3 consecutive down days. We're looking as though we may post a fourth today if we continue to see aversion towards risk. So looks like lower prices might be seen there on Aussie in line with that dominant downtrend. If we take a quick look at New Zealand dollar, US dollar, it's a similar situation. We've rallied into this resistance line here. This is one of my gun to the head trades from last week, actually, which still live by the looks of things, almost got stopped, but not quite. And looks as though it's heading back down towards these support levels here at 67.00. So still looking for lower prices there. If it breaks below this support level here, then there's a lot of fresh air for this to move into on the downside, and I think we'll be completing, a pretty large top there. So we'll be expecting to see further weakness potentially from New Zealand dollar and continued demand for the dollar index. Okay, so let's have a quick look at Euro sterling. I doubt there's anything new that's changed there. I'm correct in saying that. Still below this bearish channel, looking as though it's going to head lower towards 82.75. This is why we've got key support here back from December 2019. Let's move on from there to cryptocurrencies. So Bitcoin still under pressure, still trading in this downtrend, as you can see, highlighted by this blue line. Yesterday we saw some weakness. We are again weaker today by around about 500 points. This is the key level for me. It's 39,600. We've seen a couple of tests of this level now. If that breaks lower, then we'll be looking for a test of this 50% fib level at 35,350. If that gives way, then we'll be looking for a move down to 30,000, which was this key support zone from this period here from May 21 to July 21. Quick look at Ethereum. That continues to look pretty weak overall, still trading in a downtrend, still struggling to hold on to any gains. This is the key support to watch at 2,934. If that gives way, then we'll be looking for a move down to 2,644. It's not, I'm all out bearish on these cryptocurrencies at the moment, but this is just how I see it. If for my bearish view to be invalidated, we need to see a break of this short-term downtrend, or ideally this resistance here at 3,576. But for me, the bias remains on the downside for now. Let's take a quick look at oil then. So as we said in the outset, 7-year highs for oil. We also hit this level back in October. We've seen a really sharp move to the upside. I'm still not too sure about this because obviously we've seen this break of the channel. We've seen a retest now of this channel, and also more importantly, these big resistance levels that are relevant. Because I'll go back all this way back on the left-hand side. You can see the last time we was at these levels was back in 2014, and these particular lows here that I'm interested in to act as resistance go back to 2012, in fact. So been a long time coming, really, this retest of these levels. Obviously a key test now. Has it got enough energy and pent up demand to break through these levels? If we do see a breakout of these levels, then I think that would be very significant indeed, and we will be looking for potentially much higher prices. It brings that $100 a barrel oil back into view above those levels. So keeping a close watch on that today. I think, as I mentioned yesterday, into these levels, because they are so huge and relevant, I may even be interested in actually trying to fade that, given that it's going to have to do a significant amount of work to get above those levels. So I may come back to that on the gun to the head challenge in a moment. Take a look at gold. I don't expect much has changed here. Again, still maintain my view. This is really boring at the minute, and opportunities are so limited. I think we're just trading in a range. We've been rejected at this level here at 1830. I think while that still continues to be the case, you can maybe look for short-term opportunities towards 1762. But yeah, it's a range-bound market, and I think you need to play that accordingly, according to the ranges that are present at the moment. Let's take a look at indices. Not a great start for the FTSE 100, despite it hitting its highest level for some time. I think 23 months is what I read this morning. Yes, we have to go all the way back here to when the pandemic really started kicking off across the globe. So we almost made a full recovery up to that 76,078, which above that we'd kind of be back above pre-pandemic levels. But today, we're off to a pretty awful start. And as things stand, we've got an engulfing candle here on the FTSE 100. Long way to go before the session closes. We know the US participants love to buy the dip, so it could be a case that we see buyers come back in, and this may not end up being a bearish engulfing candle, but at the moment it doesn't look particularly good, and we could potentially see a bit of a corrective move here on the FTSE 100 in the short term. That's despite the fact that oil was up at the highs, and obviously that's a major influence on the FTSE 100, and also the bank stocks, which we're talking about raising interest rates. That's what's really driven the market over the last couple of months or so. But maybe we're going to see that story fizzle out a little bit as it begins to be priced in and accepted by participants in the market. Looking at the DAX, big red candle today, still trading in a range for me. Looks as though we could see more sideways price action on this for the time being. Clearly, resistance has formed around about 16,300. We've seen a couple of attempts at trying to overcome that, but so far failed. So the lower end of this range comes in around about 14,800 for me. So decent potential on the downside, but clearly overall the trend remains quite bullish. So just be careful on that, and just I think play the ranges again with that. I think the really interesting story is probably developing in Nasdaq. So yesterday I looked at this for my gun to the head trade because I was looking for the trend line to hold, and this horizontal support is between 15,538 to 15,500 to hold. Today, it looks as though we're below that level. It probably wasn't a good trade for me yesterday. I'll hold my hands up. I traded it on Martin Luther King Day, and it was, volumes obviously non-existent pretty much. It did trade on spread betting and CFD platforms, so it was mildly offside at the close, but it wasn't really a very exciting one. But today, all change. We are very much on the back foot with this today. We're breaking down below some key support levels. So it'll be interesting to see how this looks on an individual basis, what the big tech names are doing, and whether or not they're going to continue these sell-offs. And if you look at some of the big names, Apple and some others, we are potentially seeing some top patterns form on those, very similar to what we're seeing on the NASDAQ chart itself, actually. So there could be potentially a wave of money coming out of Nasdaq if we see some of these patterns complete, and if this pattern holds, I say if, because in the last few sessions we've seen a couple of wicks here, as you can see, this one from the 10th of January and this one here from the 14th of January, where we've seen big moves to the downside, but they've been reversed really quickly, and we've actually closed above these key support levels, say on a closing basis with these markets. So not giving up the ghost just yet, but I am a little bit concerned about this. And I think, if we were to look at this from a technical perspective and try and decide where price might go on the downside, then what we can do is measure this kind of range that we've got and project that lower, and we'd potentially be looking for a correction down into this sort of region, which is 14,300 on the Nasdaq. And if we go and take a look at the charts on the longer term basis, there probably isn't that much to worry about with that, to be honest, because the strength of the trend is so strong over many years that this would just be a reasonable pullback, and probably be another opportunity to buy the dip. But we don't know yet. It's all speculation at this stage, but very interesting day ahead, I think, given that we are below this key support, and that's ahead of the US markets opening today, obviously at 2:30 UK time. Let's take a look at the S&P 500. That's still holding on to trend support as it stands at the moment. If we start to see a break of that trend line, and particularly this low here that we posted on the 10th of January, then I think I would start to worry. 4,580 for me is the key level on the S&P 500. The S&P 500 is normally the better market to look at when you're trying to gauge what's going on with the US. There's 500 stocks in the S&P 500. There's 30 in the Dow. There's 100 in the Nasdaq that we look at. So this is a much broader index to take or to pay attention to. If this starts doing things on the downside, then maybe that is a bit of a concern for us all to, take some steps to protect yourself on your portfolios. Maybe close some bits out, take some profits, or consider some hedges. If that's if you're that way inclined. Finally, let's just take a quick look at the Dow Jones. That's actually outperforming today. As we can see, there is some more red on the screen. If we take out these two lows that we posted most recently at 35,641, then that could spark a bit of a sell-off towards these support levels down here at 33,737. So do be aware, if you're following these US markets, they are looking a little bit on the edge, shall we say, from a technical perspective, and that could trigger some more selling. Okay, let's take a look at the gun to the head trades from yesterday. As I mentioned, a little bit disappointed with the fact that I went with the Nasdaq when it was a holiday. It didn't really do anything, if I'm totally honest. It was 0.08R offside at the 9 p.m. close when we closed these trades off. And in order to get a price on that, you would have had to be looking at platforms that run these 24-hour markets, or extended markets such as IG markets, which is who I used for pricing this. So yeah, nothing doing on that, and clearly not much change to the overall outlook as a result of that trade yesterday. So what am I going to look at today? Well, oil was taking my fancy just because it's bang into this previous high here that we posted on the 25th of October. And also we have to go back many years to find why this level is relevant, that low there, back in November 2012. So I think it's going to have to do a hell of a lot to try and get above that, given that it's already seen a sharp move to the upside. This is very much a counter trend trade, so it's speculative in nature, as really all day trades are, or intraday trades are anyway. So let's have a go at this. I'm going to sell it now at 84.42. I'm going to target a move down to let's go here. The reason for that is that we've got some previous highs here. We saw a decent breakout through that level, so maybe that'll act as a support on the way down. In terms of my stop, let me just have a quick look at these levels here. So 86.40 is the major level that I probably want to consider. So it's going to have to do a hell of a lot to get through there. So just looking for a very small 2-to-1 on that. I've got my stop at 86.47, so it's a couple of ticks above that resistance level that I just referred to that goes back to 2012, and looking for a pullback, just a small one down to this 79.70 level. So looking for just a tad over 2R on that today. Okay, data-wise today, 10 a.m. today, UK time, we've got the German ZEW index, which is expected to rise to 34. At 1:30 this afternoon UK time, we've got the US Empire State Manufacturing Index. The index is expected to fall to 27.5. So a few bits and pieces to keep an eye out for today. We've also got earnings from Goldman Sachs, one of the biggest investment banks in the US, so that may provide some color on what to expect for the rest of the earnings season, particularly from the investment banks. So yeah, do be careful out there. Some really interesting levels to watch, particularly in the US indices. So good luck if you're trading, and I'll be back tomorrow morning. Have a great day. Goodbye.